Justice Department is investigating conduct that...
Tether, the largest stablecoin in the world, can't seem to stay out of trouble. Shady ties to shadow banking, lawsuits, and potential connections to short-term Chinese corporate debt.
Do you smell a scam in Tether?
I've been saying that since 2017.
Because there is no transparency in Tether. That's the problem.
Tether executives reportedly facing a criminal probe.
Tether accused of concealing from banks that these transactions were linked to crypto.
It's possible that Tether, and by proxy, the entire crypto market, has been providing backdoor financing to the property sector in China.
If true, this would have a cataclysmic effect on the crypto market. So is this the end for Tether? Should we stay away completely? To understand the full picture, we need to know what Tether is. Tether is a fiat-collateralized stablecoin under the ticker symbol USDT. And this is just a fancy way of saying Tether is a crypto that's always worth $1. And this just offers the ability to buy and sell blockchain-based assets without having to worry about price fluctuations. The idea is if investors don't have to worry about volatility, they'll just go ahead and leave their money deposited on crypto exchanges. Tether originally launched as Realcoin in July 2014 before rebranding later that year to Tether. From small beginnings came massive growth. As of December 12, 2021, Tether had total assets amounting to $77.4 billion. And they've only grown. Their assets have increased 360% since the beginning of 2021. If Tether was a country, it would be the 91st largest by assets, just ahead of Libya. Tether's notoriety began in 2016 when the Panama Papers revealed 11 million documents spilling the golden beans about 200,000 offshore companies. The Panama Papers leaked that another company, previously only speculated to be affiliated with Tether, had actually set up Tether in the British Virgin Islands in 2014. This company was Bitfinex, the 37th largest crypto exchange in the world and behind-the-scenes puppet master of Tether. And this is important because Bitfinex outright lied about their ties to Tether prior to the Panama Papers leak in 2016. And the reason that this was kept secret became clear as this was just the start of a series of bad choices, legal battles, and questionable behavior that the companies haven't shrugged off to this day. The first big legal scandal started back in 2017 when Wells Fargo and other banks decided to stop processing transactions between the exchange's Taiwanese banks and its US customers. This forced Bitfinex to turn to a shadow bank for payment processing. This company is called Crypto Capital Corp. This banking relationship created even more trouble for Bitfinex. And the thing is, Crypto Capital Corp has a list of its own controversies as well, from allegedly stealing from clients, covering up losses, and a criminal manhunt. But either way, by 2017, 4 years after its incorporation, Crypto Capital Corp was the go-to shadow bank for many prominent cryptocurrency exchanges. BitMEX, Bitfinex, and Kraken were all clients. Now, as scary as the name shadow banking sounds, it's really not that serious. A shadow bank simply provides services similar to commercial banks, but does so on the outside of normal banking regulations. Okay. That still sounds bad, but it's not, I promise. Insurance companies and even pawn shops could be considered part of the shadow banking industry. In fact, the shadow banking industry is about 6 times larger than the regular banking industry. It's huge. But hold on, what does this have to do with Tether? Well, Tether is the sister company of Bitfinex. In fact, both Bitfinex and Tether have the exact same executives. So not just sister companies, but more like identical twin sister companies. Either way, the connection was deeper than just people. Tether lent Bitfinex $625 million after Bitfinex was hit with a massive loss that it held with a certain payment processor, Crypto Capital Corp. With so much money missing, the Bitfinex exchange was not functioning properly, and this caused huge delays and transaction issues for customers. This is when authorities caught wind. The New York Attorney General's office contacted 3 companies, Tether, Bitfinex, and their parent company, iFinex. This order requested the companies to stop everything and report to them immediately. What the Attorney General's office uncovered was that the money Bitfinex had lost through Crypto Capital Corp was actually direct from Tether's reserve. And we haven't even talked about the messages yet. The New York AG found messages between a Tether Bitfinex executive under the alias of Merlin and a Crypto Capital Corp executive who goes fittingly by the name Oz. The messages Images showed Merlin pleading and begging Oz for the return of their missing cash. Hundreds of millions of dollars in missing cash from Tether's reserves. And this is important because all 70 billion USDT coins are supposed to be backed exactly by $1, a promise that was proudly advertised on their website, a promise that can't be true if Tether is missing $850 million. Well, a few months later, Tether changed their website, changing it to say every Tether is 100% backed by reserves, not cash. Reserves can include currency, investments, or loans made by Tether to third parties. So problem solved, right? If you can't meet your promises, change them. Bitfinex eventually settled with the New York Attorney General's office in February 2021 by paying out $18.5 million in fines. Yet it's still a mystery of what Crypto Capital Corp did with the missing $850 million in cash, something we may never have a clear answer to. But the story for Tether doesn't end here. It's really only just beginning, because suspicions continue to swirl as to whether Tether even has a full asset backing, much less a one-to-one dollar backing. They do have third-party audit reports done, which appear to happen on a quarterly basis, and the most recent report shows full asset reserves, but there's questions as to what they're investing this money into and a call for more transparency. Bloomberg published an investigative article alleging that USDT was partially backed by short-term Chinese corporate debt, possibly Evergrande.
Social media footage shows crowds protesting in front of the offices of the Chinese real estate developer Evergrande.
One of China's biggest property developers.
It's one of the most indebted companies in the world. Evergrande borrowed a lot of money, what we call offshore, in international financial markets.
And it might not be able to pay it.
The government is continuing to see just how far this bleeds into the system.
Evergrande and China's looming risk to Tether.
There's rumor that Evergrande holds quite a bit of Tether.
Tether claims this is simply a publicity stunt. They say that Bloomberg was taking snippets of old news from dubious sources and trying to fit this predetermined narrative. They say that the Bloomberg piece cites misinformation from a disgruntled individual named John Betts, the former head of Noble Bank, a bank that Tether fired. Hindenburg Research has since offered a $1 million reward to uncover Tether's true backing. Tether also responded to this by calling it a cynical, pathetic bid for attention. Based on all available information, I've put together this chart of Tether's assets. We can see currently only 10% of their reserves is held in cash, 28% treasury bills, 16% in loans, bonds, funds, and precious metals, 44% in commercial paper with an average rating of A2. Around 1.6% or $500 million of their commercial paper is rated too low to be given an investment grade. This is the debt that has eyes on it. But their debt and asset reserves aren't the only concerns. Tether had another massive scandal when a group of traders alleged that Bitfinex used USDT to manipulate the cryptocurrency market during the 2017 and 2018 bull runs. This appears to be unlikely though, as one of the largest claims was debunked. The CEO of Circle, a Tether competitor, stuck up for Tether here, saying that exchanges use wallets that pool all customer balances together, and therefore an analysis that shows a single wallet was involved in this stunt can't be accurate. Beyond this, we have the concerns of stablecoin regulation. This wouldn't likely crash the markets, but it could change the way that crypto is transacted. The Stablecoin Act of 2020 proposed to outlaw stablecoins in the United States. However, this bill hasn't gained much traction. A more likely occurrence would be a crackdown on stablecoins in conjunction with a government-issued stablecoin, referred to as a CBDC. Now that we understand Tether's history, I want to talk about stablecoin lending and why rates are so high compared to interest rates found in traditional finance. There are very few opportunities to earn 8 to 20% interest on cash like you can through stablecoin lending. I have personally made $22,000 this year through lending stablecoins alone. I'll have this site linked in the description if you're interested in trying it out for yourself. The average interest earning savings account in the US is currently 0.06%. Over 100 times less than what you can get lending out Tether or other stablecoins. stablecoins. How is this possible? How is this sustainable? There's a few factors at play here. The first is risk. Crypto does not have access to traditional financing options that more established sectors have. And on top of this, there's no FDIC insurance on your stablecoin holding. This means the supply and demand curve for stablecoin lending might look a little bit different than regular old US dollar lending. Most people wouldn't trust putting all their money in a stablecoin, but they do trust a bank account. And then we have borrower creditworthiness. Many crypto loans are taken by people who may not be able to get loans elsewhere due to credit risks. This leads to higher rates. Now, exchanges do counter this risk by implementing insurance funds, but there is additional risk. And finally, some of the rates are fake. Well, kind of. Exchanges know that if they offer high yields on these risk-free stablecoin lending rates, users will flock to their platform. Because of this, many exchanges will simply lose money paying out these rates in order to attract more customers. So will rates remain this high forever? Probably not. More regulation will come, bringing more safety to the space, and companies will eventually begin lowering their rates as they attract more and more users. So where does all this leave Tether? Given the amount of publicity that this company and its reserves have received, it's hard to say that they will ever collapse. Even if they did collapse, they're so large that we're getting to the point of too big to fail territory. A collapse of Tether would collapse crypto in general. We don't want this to happen. The best thing we can hope for is more use of other stablecoins with more trustworthy backings and frequent third-party audits. The biggest two in terms of safety and popularity are USDC and DAI. USDC was founded jointly by a company called Circle and by Coinbase. They receive monthly audits. DAI takes a bit of a different approach in that it's not backed by fiat, but instead backed by other cryptocurrencies. Dejed is a soon-to-be launched algorithmic stablecoin built on the Cardano blockchain. Magic Internet Money is the largest stablecoin on Avalanche and is backed by fiat dollars. So the problem is, at this point in time, it's hard to get away from Tether completely. If given the choice, I prefer not to use it, but that's not always an option. However, the good news is that alternatives seem to be getting more and more popular. We seem to be slowly getting out of this abusive relationship with Tether. So from here, I would like to let you know about my Patreon. I'm on a mission to create the best resource for financial content on the planet. Every month, we're adding new exciting things like high-level coaches and daily signals on top of regular buy alerts, a private community, and additional content. I am really proud of this community. You can check it out linked in the description of this video. From here, I recommend checking out this video on the best methods to store your crypto safely. And I would like to thank you so much for watching, and I hope you have a profitable day.